All right. Well, I guess without any further ado, we're going to get in here. We're going to be talking about two trades here on Friday, the 14th, that absolutely ripped. So going in Friday today, if I back this up a little bit, um, playing for my fibs here, this 382 level I have here, right at 45 or 49.50. This has been a main level on SPX we've been trading over the past couple of weeks. This is actually the 618 retracement off of the January downtrend, that little sell off we had going into the end of January there. And as you guys know, if you followed us for a while, the 618 level is, your most strong level for reversal. Also going to be, in this instance, your strongest overhead resistance to break through. So we actually had an untested gap fill here from the previous Wednesday. After Google earnings, we kind of gapped up and then sold off the very next day. We had an untested gap fill here. So sentiment going into this week, we were really waiting to see how this was going to play out. Obviously, had this really strong resistance overhead, but just statistically, this gap was going to have to fill most likely before we got to move down. Diamond has the exact statistic. I believe it's 80 something percent of unfilled gaps get filled before you have a move stronger in either direction.
Yeah, sounds
So, ultimately we were really looking to see this level test and reject before, taking anything in either direction, really. If this gap filled and then we broke above 45.90 here, ultimately that would have been your strong sentiment to then go long when something bullish. You had another untested gap above that then before your next fib level. So we were just kind of waiting to see how this was going to play out, right? And you can see we opened up here on Thursday, actually right at the bottom of the gap, and filled the entire thing with intraday live trading, which is exactly what you wanted to see, right? You like the day before we had opened up into the gap again, but we wanted to see this whole gap fill holistically with live trading. So Thursday open, we opened right at the base of the gap, filled the entire thing into the open. And you can see this is now the third time we tested this 45.90 level. We tested it obviously when it was set last Wednesday, or when this initial gap was created last Wednesday was the initial test rejected. We then tested it into Wednesday's close. As you can see, we were off here by like 92 cents. And then Thursday morning here, we pretty much tested it within a couple points again. And right here at 1040, this ended up being your high of day. So we were kind of watching this pretty closely to see how this was going to play. Ultimately, you would have had your best return had you just shorted right off this level, but we're always looking for some confirmation, right? So we got an initial really strong knife off of that, kind of consolidated here in the middle for a little bit. And then right here at 1240-ish, this huge knife that we had, this was right when Bullard of the Fed came out saying, basically, I don't think he was predicting it, but I think he was saying he would be in favor and could foresee a 100 BP spike by July, which definitely is more aggressive than everyone was anticipating, right? I think bond futures were pricing in 4 rate hikes for the entire year of 2022, right? And now a person with a position on the Fed is stating that he could see, the equivalent of 4 hikes by July. That would equate to, 25 0.25% spike in March, April, May, and June. And or, if we got a double hike in March with a 50 BP right off the rip, then it would still be another 2 out of 3 months getting a 25 basis point rate hike up into July, right? So a lot more aggressive than everything was pricing in. Really bearish news. So, from a technical standpoint, this is what we were looking at. And then, news coupled in with that really played this catalyst perfectly. So we had this really strong knife. I wasn't going to buy into the knife, obviously. We're waiting for the ADMA retest and reject. So right up in here, I believe, was where we ended up taking 45 or 44.50 puts on SPX for the 11th of February, that Friday, right? This was a Thursday. We didn't have 0 DTEs, but we took the 1 DTE 44.50s. I was ultimately assuming that we're going to break this 45.20 level here. And then my next level I'm going to be playing to, I had overlapping fibs down here at 44.50 and 44.52. So in my mind, the 44.50s with it, a day out was ultimately the best play here. So we ended up, we entered right off this 8 EMA test, rejected. We got a really strong trend all the way down into close here. These actually almost went. Oh no, here we go. Sorry, I'm looking into Friday. So here we go. We closed right down in here, right under 4,500, I believe. So this is actually a really good trade. These went over 100% in the first day on a non-zero DTE with 1 day till expiration. So about all you can ask for, honestly. We ended up trimming half of these going into the close on Thursday, right? Give myself a risk-free trade. Whatever happened Friday then. was just a bonus, but we were able to take all the risk off the table on Thursday. So we then swung the second half of these risk free into Friday. And as you can see, you know, we ended up closing all the way down here at 44.16. At peak, these were up, I want to say 700%. So these netted right around 450 with profit trims. But at peak, these went up right around 700%, I believe, from my initial entry. Anything else I should hit on here?
No, I think it would be beneficial to show the macro, like where you're getting the fibs from.
Yeah, sure. So let me zoom out. We can just cut this up. Yeah, so for you guys watching here, the fib levels I've been playing off of, I'm using our two, you know, kind of macro size trends that we've been in between. Obviously, we had our encompassing bearish trend to the downside here. This was the January sell-off. So we set all-time highs in SPX at 48.18. Pretty much turned the calendar year right into a sell-off, and we had that really, really strong move down to 42.22 here. So here's your overall macro sized, you know, downtrend. As you can see, so this would be, you know, your initial retracement that you're going to plot out. But as you can see, you get really large gaps between your levels here. So between the 618 and the 50, you have a 70 point. You have another 70 point to the 38.2 here. And then in between, you know, these smaller levels, they're pretty much like 70 point, 80 point gaps between all your levels here, which is really hard to play intraday. So off that, we kind of let this pan out. As you can see, we got a perfect, this was your initial test here of that 618 level. I have mine plotted backwards, so I get extension levels, but where mine says 382, as you can obviously see, that is the 618 retracement. So we got our initial rejection here. That at the time was, and still, you know, currently is your recent swing high. That was right at 45.95. So after that was set, came in here, I plotted my bullish retracement of this recent swing high that we had over those, you know, I guess it was like a week here of the bullish upside trend. So then I have overlapping levels here. As you can see, my 382 perfectly coincides with the 382 of this one here. You then have your 50 and your 618 of the bearish side down here at like 44.08 and 43.65 just about. And then here's obviously your stronger levels. So as you can see, if I kind of zoomed this out, right, you can see we rejected the 618. We found support at the 382. We're kind of bouncing between the 382 and the 50 retracement level here for a couple days. Got a strong move up here. This was Wednesday into the close. Rejected the 618 again. Then Thursday open for a third time, rejected the 618 level right here. And this was ultimately where we jumped in for the sell-off, right? Triple tap at the top, couldn't break the 618, the really strong resistance overhead. Also had the news coupled with it. You had the Russia-Ukraine situation evolving. You had, you know, Bullard saying a lot more bearish and hawkish things with the, you know, Fed's monetary policy implements coming up. So a lot of bearish news coming in that kind of stemmed this little sell-off that we ran.
Right. So let me just go ahead and recap. So we've got the initial fib retracement is going to be from the high on January 4th to the low, the bottom of the market on January 24th. And then your second fib level goes from the lows of January 24th, that bullish trend up to the 618 of the original sell-off, which would be the high of that one.
I think it was February 2nd.
Yeah, February 2nd. Right.
Yep.
So and this is a really good example because, you know, one thing that we're always talking about is you know, using TA as a level, as a piece of conviction, but not as your whole conviction, right? And so when you have you know, a 618 retracement and you think that may be resistance, maybe showing a sign you know, of weakness, you can't just jump in short there, right? You want to look at what else is going on in the market. And like you said, we did get that bearish news, the hawkish news rather, from Bullard of the Fed. When you're coming up on resistance, you're getting hawkish news from the Fed, where, you know, 3% off all-time highs. All of that is now multiple pieces of conviction that you can use to take this trade, as opposed to just saying, we're at the 618, I'm going to buy puts, right?
Yeah, all the same. Obviously, like TA only goes so far, and you want to use your TA to guide you, but ultimately news runs the markets, right? Like no one out there, you know, as an investor, no hedge fund is looking at this and saying, oh, we're hitting 50, you know, 45.90, we're going to short, right? Like TA you use as a guide to kind of trade between. Ultimately, it'll act as support and resistance levels, but news drives the market. So, had something come out that was, bullish news, this level would not have been pertinent. We would have played the break of it in calls. So just keep that in mind. Your TA is only going to go so far. It's not the end all be all, and it's, certainly not going to drive markets. News is what's going to drive markets. So, but again, to recap, so it was successful in this. It did play as strong overhead resistance, and it did play, as you can see, pretty well to the levels to the downside as well. Even today, so we're recording this on Monday, right? So this was the 618 of the bullish move from January 24th up to February 2nd. We had the 618 retracement of that move right here at 43.65. We ended up setting low of day here on this Monday at 43.64.84. So, off by 15 points on SPX, 4,000 plus point index. Pretty good.
Exactly. Love it. Perfect trade.